Hi there, welcome to Kneppy Invest. On the surface, one of the most impressive Appendix 4Cs you will ever see was released by MedAdvisor. This company was operating cash flow positive by $21.4 million in the December quarter. Yes, that is in one water. So why aren't we all rushing out and buying MedAdvisor shares? Because the market cap of this company is around about 140 million. So if they can continue this momentum through the next few quarters, this company will be bringing in a busload of cash. So we do have to be cautious about this particular quarterly report. And there are some flaws when it does come to the Appendix 4C or the Appendix 5B for mining companies. And one of those flaws, and a significant flaw, is we don't see any changes in working capital within the Appendix 4C. And that could have had a significant effect on this December quarter results for MedAdvisor. And we won't be able to see those effects of any changes in working capital until the company releases their half-year results in the next few weeks. So in today's video, I'm going to go through MedAdvisor's Appendix 4C for the December quarter. Because even though I am being a little bit cautious, it's still an impressive result. Being operating cash flow positive by $21.4 million is impressive. So I thought I'll do a video on this company. I haven't done a video on MedAdvisor for well over 1 year. Share price has been dropping, but the sentiment in this company has shifted over the past 3 to 4 months. So let's get into MedAdvisor. And before we have a look at their Appendix 4C, let's talk about what this company actually does. MedAdvisor is a digital medication adherence solution company. They have developed this pretty useful app that lets people take back a little bit of control when it comes to their health and to their medication adherence. So let's have a quick look at that app just to see what it's able to do. This app is actually called MedAdvisor Medications Manager. Has a rating of 4.3 with 2,600 ratings. So quite a few people actually use this app. So it lets people manage their prescriptions and stuff like that. So that you can order prescriptions and skip the queue at the pharmacy, connect directly to your local pharmacy and choose pickup or delivery. The current CEO of MedAdvisor is a boomer sooner. His name is Rick Radliff. If you don't know what boomer sooner means, I'll tell you in a second. He's been in this role since July 2022. So even though he doesn't have extensive experience with MedAdvisor, he has extensive experience, 30 years of experience in the healthcare and pharmaceutical technology sectors. He's also worked with the Australian federal government to develop and deliver My Health Record. Now on to Boomer Sooner. He holds a Bachelor of Chemical Engineering from the University of Oklahoma. Boomer Sooner. So anyone from Oklahoma, University of Oklahoma, is called a Sooner. And it all comes back to the land rush back in the 1890s, if I remember correctly. And those who left early to grab land were called Sooners. And those who stayed back and waited for the time they were supposed to go and grab land were called Boomer. And if you ever go to a football game at the University of Oklahoma, one side of the stadium yells out Boomer, the other side of the stadium yells out Sooner, hence the term Boomer Sooner. He also holds an MBA from the University of Tulsa. So based off his degrees here, more than likely Rick Radliff is an Oklahoman, and he's probably a proud University of Oklahoma graduate. Now onto some facts in regards to MedAdvisor. This company was founded in 2012 by Joshua Swinnerton, who is sort of like the product development leader of this company. So the founder is still with MedAdvisor. The company was listed on November 2015. Seems like it was a backdoor listing via a mining company, a mining exploring company called Exalt Resources. To the largest shareholders are the Guild Group with 17.5% holding and EBOS with 4.9%. The last time I did a video on MedAdvisor was back in April 2022, and the market cap at that point in time was 68 million. That was at a share price of 18 cents. Now at 26 cents, the market cap of this company is 141 million. So over the past year, this company has done a capital raising because the market cap has more than doubled, yet the share price has not more than doubled. And the only way that can happen is if there was a capital raising in the past year. And the ticker code for this company is MDR. Before we have a look at the company's December quarter for financial year 23, let's go back 1 year just to see how this company has progressed in the last year. So 1 year ago, receipts to customers, $21.1 million. Yeah, the company was not operating cash flow positive. They were actually negative by $2.6 million. So MedAdvisor does spend a lot of money, $13.3 million on product manufacturing and operating costs and almost $9 million on staff costs. And because they were burning through cash, they only had $5.3 million of cash at the end of this quarter. So we now can understand why the company needed to do a capital raising, because they were burning through a fair bit of cash 1 year ago. Now let's have a look at the most recent December quarter and why this was one of the best Appendix 4Cs you'll ever see, just based off the operating cash flow. Now, there are a few things to be cautious about when it comes to this particular Appendix 4C, but receipts to customers up to $41.2 million, and they were operating cash flow positive by $21.4 million. So receipts up $20 million. Product manufacturing and operating costs down $7.5 million, which is pretty significant. I probably want to understand why product manufacturing and operating costs were down so much. Was it just a one-off, or is this some sort of cost-saving initiative the company has implemented in the past year? Staff costs up $2 million, administration costs up $2.3 million. I would prefer to see staff and administration costs actually down instead of up, while product manufacturing and operating costs up instead of down, but that's just me. But the company was still operating cash flow positive by $21.4 million. In fact, they're operating cash flow positive by $16.5 million for the first half of the financial year. And because they were so operating cash flow positive, the cash on hand grew from $11.9 million to $32.7 million. So they do have a lot of cash to play with, a little bit of flexibility, but more than likely, I'm going to say at this point in time, one of the ways they're going to spend that cash on hand is just changes in working capital. So more than likely trade receivables and trade payables, but that remains to be seen. I need to look at the half-year report they should release in the next 3 weeks. One thing I always look at is Section 7 of the Appendix 4C or 5B, just to see if the company has a little bit of debt. And MedAdvisor at this point in time does have $11.5 million of debt and also $1.8 million of unused financing facilities. And that sort of debt is not too high, particularly because I have a lot of cash on hand, but I don't want to see the debt levels continuing to increase. The other thing to pay attention to, if you do look at Section 7, is go to Section 7.6, which gives details of their debt. For instance, a term loan, $5 million US secured, Partners for Growth VILP, 10.25% IR for 3 years, maturing 28th of May 2024. So one of the things I don't want to see with MedAdvisor is these debt levels rising. That would be a red flag, in my opinion. I've already mentioned we should be a little bit cautious when it comes to MedAdvisor's December quarter results, because we don't know the changes in working capital. That means we don't know changes in inventory, but more than likely it changes in trade receivables or trade payables. There's a possibility that trade receivables came down a lot or trade payables increase a significant amount. So you'll be able to see changes in working capital when we look at MedAdvisor's half-year report in the next 3 weeks. I think I've mentioned that about 3 times. But also in the commentary, there was a mention of profitability from the management, from the CEO, and this is another reason to be a little bit cautious. So let's go through some aspects in the commentary that gives a bit of an insight into this company and a bit of an insight into this particular quarter result from the company. So the significant growth in revenue was well supported by the increased participation by pharmacy, as well as a continued success of our US COVID-19 awareness program through to the end of 2022. While these second quarter results are excellent, we recognize that the momentum in the first half of the financial year is now likely to moderate as we move beyond the winter months in the US that provided a seasonal peak for this business. So even the management is trying to suppress the expectations of this company in the second half of financial year 23. And the other reason we need to be a little bit cautious by these results is the very fact that they don't expect to be profitable until financial year 24. So the CEO mentioned our focus for the remainder of financial year 23 and beyond is executing on a path to profitability, prioritizing initiatives that will move the business to a break even and lay the foundation for profitability in financial year 24. So even though a company can be highly operating cash flow positive in one quarter, they may not be profitable. And the very fact that they're aiming for profitability in financial year 24 should give us pause when we look at this quarter report from MedAdvisor. And saying all that, when we do look at the receipts history from MedAdvisor, it is impressive. The growth in receipts over the past 2 or 3 years has gone from about $2.4 million in the June quarter 2020 up to $41.2 million. Now, the company did make a fairly significant acquisition a few years ago that did help the cash receipts. But again, we need to sort of temper our enthusiasm when it comes to this particular quarter result, because even though receipts doubled from the September quarter to the December quarter, if you go backwards from that, the previous 4 quarters, receipts actually were going sideways. So nice increase in receipts, but we need to see this momentum moving forward from here. And we've already seen those tempered expectations from management. They don't expect this momentum to continue in the second half of the financial year. And they expect profitability, not this financial year, but financial year 24. And saying all that, so going from being quite positive, negative, back up to positive, when we look at the chart from MedAdvisor, share price has been all over the place in the past year. In fact, this goes back to October 2021. In fact, the share price did reach a high of about 41 cents back in early November 2021. And then the share price moved into a well-defined downtrend during 2022, which makes sense because this is a loss-making tech company, and loss-making tech companies would have seen the share price probably more than halve. And that's exactly what happened to MedAdvisor. Share price went from, say, about 35 to 40 cents all the way down to a low of about 13 cents. And that low was in October. So share price didn't halve. In fact, the share price decreased by something like 75%. But the sentiment has shifted from highly negative during most of 2022 into a positive over the last 3 or 4 months. Share price has moved into an uptrend, a nice developing uptrend with a higher highs and higher lows. And every time we see a dip of the share price into that green area, and that green area is sort of like the buying zone right now, because every time we see share price move into the green zone, we see some buying coming in. And the share price right now, on what's today's date? The 9th of February has moved into that green zone. So wouldn't be surprised to see a little bit of a bounce in the share price, particularly if the company releases some positive news. But again, I'm tempering my enthusiasm for this company just based off the commentary from the management in the quarterly report. And that's really all I have for this video, looking at MedAdvisor's absolutely stellar quarterly report, operating cash flow positive by $21.4 million. If I saw MedAdvisor being operating cash flow positive again by $21.4 million in the current quarter, the March quarter, I would get pretty excited. I don't expect this company to be operating cash flow positive in the March quarter, probably not even operating cash flow positive in the last quarter of the financial year. And I do expect, just like management are expecting, this company to move towards profitability, if not in financial year 24, definitely by financial year 25. So if you do have any thoughts about MedAdvisor, any questions about this company, love to hear it. So leave in the comment section of this video. Otherwise, I'm not a financial advisor. If you do need financial advice, make sure you seek out someone who is qualified and can speak to your own financial needs. That's it for this video. Have a good day. Bye.